Well, good evening, everyone. I'm back with more dividend videos. Had to take a little 3-day weekend excursion there, but normally I've been on a almost daily video upload here for the last couple months, and I'm gonna at least continue this until we get into May because I'm still trying to meet my watch hours that I need to stay monetized. So maybe those of you that watch me can help me with that. Anyway, today we're going to discuss a new one called ticker symbol is OILK, and we're going to compare it to TSLY, which is very quickly becoming one of the new favorites. So let's go ahead and look at Yahoo Finance. And like I said, I'm going to keep this subject, this genre going, at least until I hit the watch hours. It may take me past May, but this is by far the subject that gets the most views on this channel. So it's no secret. That's why I keep talking about these, even though there's a wide range of stuff I could talk about on here, right? So I guess we'll start out with the TSLY. The TSLY fund was up 2 cents today to $14.88. It's actually up in the after hours to 15.39. And let's look at the dividend because I believe it just paid another dividend out. And I got an interesting comment today that I've been thinking about. I may actually be, as outlandish as some of these dividends seem, I may actually be understating them because a lot of these that are paid out monthly, if you're reinvesting them monthly, the compounding is actually going to happen a lot faster. So I might go ahead and do that example today, just to use that example, because when you compound monthly versus annually, you're talking about 12 points of reinvesting per year. So the compounding actually accelerates a lot faster. And we did get a dividend paid April 6th. So we were at 0.999 January 10th, 0.90 February 8th, 0.902 March 8th, and we fell to 0.829. And some commenters explained why that happened. So if you want to read my comments, you can find that because a lot of you really follow these closely. So I appreciate the really good comments on these. But let me just do a quick 4-month average here and annualize it. The 0.829 is going to bring us down. So divided by 4 months, we're still averaging 90 cents a month. Times 12, still 1089. Divided by 1488 is actually 73%, still higher than I said in the thumbnail. So this one is still phenomenal. Now, what I want to do before we go into the first one, because this TSLY is probably the most exciting one, I'm going to go ahead and go into the spreadsheet here. And what we'll do, because I already have TSLY in here, but I'm going to do something a little different today, because I know one of you in the comments wanted me to change things up. So I am just very slightly going to change things up to make it more interesting. One day I'll change things up even more once I hit those watch hours. So that's all in the hands of the audience because the audience is where I get my watch hours from. So once I hit the watch hours, I can talk about other things. So the sooner I hit those, the sooner I can talk about other things. Or if other things got views, I could talk about them now. But anyway, oh, good. Glad to see one of the core fans showed up here. How are you doing? Yeah, it's been like 3 days for me, but I'm back. So talking about TSLY. And I was just addressing a commenter that wanted me to change up my content, but I have to keep pretty much covering this because it's mainly what gets views. So anyway, yeah, switching over to the spreadsheet, which is what we're going to do next. We're going to go over here and let me see here. Okay, so the spreadsheet. Yeah. Okay, this is sharing. Got to get back on it here after the 3-day weekend. I actually had a fun weekend. I actually golfed for the first time since before I was a YouTuber. It's been like a year and a half. Hard to believe, but getting back into it. Had to practice a little bit, but I think I'll be more consistent now. Anyway, so here's TSLY. I'm gonna have to insert some lines here to do what I want to do. So let's see. We will. Oh, I have a lot more that I've added. I'm gonna have to really cut and paste down. So let's see here. Cut. And then we'll move these down probably 5 lines. I'm thinking we'll move them down here. Okay, because what I'm going to do, I'm going to take the number of shares, and you'll get what I'm doing here in a second. So it's paid 4 months worth of dividends, 0.903, 0.902, and then what was it down to now? 0.826, correct, right? 0.829 actually. Okay, it's 0.829 for the 4 months. So what I'm gonna do what this commenter suggested, and I'm gonna compound this monthly. So what I'm gonna do, I'm gonna take the number of shares here and sell B111, good number, and this is what we would make. So basically $1 a month in the first month. Now let me just carry the logic down here, and let's do this. Oh, come on, you didn't carry down. Now watch it. It'll probably remember it after this one. Let's see. Let's see how smart you are, Google Sheets. Not too smart after all. Now watch it. See, now, now it's going to do it. This is silly. Come on. Okay, this times this is this. Okay, so let's see now. If we're compounding this, let me think about what this commenter said. And these are all in dollars. These are what we would have made. These are what we would have made. And I get what the commenter's saying. I just have to kind of figure it out here. So I probably should have given myself more lines. Actually, what I can do, I can do this over here. And remember, compound interest is free money in this example here. So let's see. I'm actually going to move this, copy it over to here. So let's see, move over here, paste over here, and of course we get zeros because this spreadsheet is stupid. I want to do this times, it didn't carry the logic forward. 111. Okay, sell 111. Not 111. I need the letter too. B111. B111. We have your position. B111. This is annoying. Okay. You know what? Okay. So what I'm trying to do here is let me think about this. So the $1 million. In the $1 million example, we have this many shares of this. Okay, so what I'm going to say is just take 1,000,000 times this, and we get an error, of course, even though I didn't state it in terms of money, maybe because of the commas. Okay, there we go. Darn it. No, I'm not doing this right. Hmm, hmm, hmm. So this is monthly. Let me try this here. This is some manual work here. I'm going to add the first month of dividends, and I get another error. If I get a third error, I go for the hat trick. Okay. Let me take out the currency. Plus, let me just add this. This is really annoying. Maybe I'll take the formatting of the currency out here. Just bear with me here, those of you watching live. Or, you know what, I'll just have to probably manually type it in. There's a method to the madness. You'll see where this goes in just a second. 67, 7, 90, 22. Another, all right, I got the hat trick. You know what, I should go have a drink right now and just end it. I'm just kidding. Let's see where we are here. Dividend. You know, it's funny. I didn't buy TSLY yet, which is funny because it seems like I'm making my audience a lot of money because it seems like a lot of you are doing what I talk about, but I'm not following my own tips. So keep in mind, those of you that have made a lot of money from watching me, there's always that super chat feature. That's always an option. And yeah, thank you for the comments there. Okay, now that I got the hat trick on errors, let's see. Okay, let me take these commas out again and see if that makes a difference. This spreadsheet's really Getting on my nerves. Okay, for some reason the commas were messing it up. Okay, so now what we're gonna do? All right, so the first month we got $1,067, or $1,067,000, and then we're gonna take this times 1.0903. Okay, so this is how with this compounding, this is how this is gonna work. All right, or you know what I could have done? I could have just done this here times 1.09999. Hold on a second. No, I'm still not. I'm still not doing this right. Okay, it's 1,067 in the first year. I'm sure I know there's a better way to do this. I'm a finance person after all. I'm just kind of like I'm drawing a blank. All right, it's not times this because that's too much. It's adding too much to it. So I think this example is going to be really complicated. If we compound it monthly, okay. So we've got 1,067. I'm stumped here live, people. I mean, this commenter stumped me. So you got me stumped live. Um, okay, so 1,067 in the first month because you have to take like the number of shares. You know what? Let me insert another column. Let me do this here instead of doing double L's. Let me insert a column here. Insert. Oh, what did I do? What am I doing? Where did it go? Where did we go? All right, I'm on cell 111. Lucky number 1 of 11. Insert one column to the left. Okay, and then back to cell 111 where we are. All right. So okay. How many shares do we start out with? We started out with 67,797. Okay. So then we're going to compound the number of shares is what we're going to do. And then I'll use column K for the dollar amount because the dollar amount is what we really care about. It's not so much the number of shares, it's what they're worth. Let me get a drink real quick. I'll be right back. All right. Are we having fun yet? So what we're going to do, all right, we're going to times this one by this guy over here in J112. So that's going to be 1.0903. We get a date. I don't know what's up with that. This is crazy. Tripping out here today. How in the world L111 times this gives me a date way in the future, like almost 80 years in the future? Well, that's not what we want. So this, I don't even know why this. You know what I'm gonna do? I'm gonna just take this. This spreadsheet sucks today. Times 1.0903. We still get a date. Unbelievable. You know what I'll do? All right, Google Sheets. You want to do this to me? Well, I've got my phone, so I'll use my phone calculator. All right, 67,797. I wouldn't think 3 days would make things this crazy, but I guess it's a reminder to just keep uploading daily. Okay, so I have the number now, Google Sheets, so take that. So this is 73,919. And then, yeah, now nothing funky in the cells. So let's see here. Okay, no more comments yet, but I've got 3 of you that have hung with me so far. So just hang in there. We're gonna get a very good example here. All right. So in not year 2, month 2, 73,919. So you see your number of shares. Let me think about this. You're reinvesting it, so you're buying more shares. So you're assuming the number of share, or I'm sorry, you're assuming the share price is staying constant. Just to keep this example simple, I know there's a way better way to do this. I'll research it and probably cover it tomorrow. Anyway, all right. So you're reinvesting it at the same price. So then it's going to be this one times 1.0903. 0.902. So now you're going to have 80,586 shares. And we're only going to do 4 months because we only got 4 months of dividend history in this guy. So that's all we're going to do. So 80,586 shares times 1.0. Wait a second. Am I doing this right? It's actually, no, no, no. I don't think I'm doing this right because this is this is a dollar. This isn't a percentage. Darn it. So, okay, a million. I actually I told you this was complicated. I need to take this and restate it as a percentage is what I need to do. So this column doesn't affect this column. So it's going to be, dang it. I should have done this live. Okay. This, if we annualize this times 12, it's a $12 dividend, right? Okay. And I know I don't want to autofill. So $12 divided by 1488 is an 86, or I'm sorry, an 80% dividend. Okay, so 0.99. So how do I do this now? 0.9999 is 1/12 of $12. So I'll do this. 0.9999 divided by 1488 is 0.7% approximately. So okay, what I need to do then, because this example is getting too crazy, um, I need to actually take. All right, it's point. Let me just do them all. It's going to be 1 point, not 0.67. It's 0.0067 because this is basically a 0.5%, and it's not dollars. You stupid spreadsheet. It's percent. Not. It's not percentage either. I don't know. This formatting is all off. Anyway, let me see if I just type it here. Let's do it up here. 1.0. Hold on. 1.067 is what it's going to be for the first one. Stick with me here. Second month, 0.903. Let's see, times 12, that would be 1083. All right, so for the month, so again, it's 0.903 divided by 1488 because that's the current fund price. So this is going to be 1.06. So good job to the commenter that said this. You really caused a complicated example, but I'm sure this commenter will come back and say, "Oh, this was so easy. All you had to do was just do this or that." I know there's an easier way to do it, but I just want to get through this here. Okay, so let's see. The third one is 0.902 divided by 1488. We're having like a workshop here. So this is 1.0. Hold on a second, I'm still not doing this right. It's supposed to be 1.0067. 1.0, shoot. It was 0.61, right? And then this one, the 0.829 divided by 1488. 1.0557. Okay, now it's going to be 67,797 shares times 1.0067 is going to be 68,251 shares. And then in the next month, it's going to be 68,251 times 1.0061. Now we're cooking. So 68,667. And then we got our 3 sixes in there, so that counts. And then it's 68,667. Got to put some humor in here. Although, you know what's funny? A commenter finally caught my S&P joke, and I've made that joke since I started YouTube. I actually made that joke in like my second video that I ever did, and uh, I'm glad one of you finally caught it, but took you long enough. That's all I'll say. So, all right. Uh, Oops, I did it here. Look, I screwed up again. It's actually 1.005. Was it 557? I can always go back. At least the undo works on this spreadsheet. All right, so 68,667 times 1.00557 is 69,049.48. we'll just round down. Okay. So now what we can say, this is our number of shares times say 1488. Say the price didn't change at all. So you would have made 27,449.12 in the first 4 months. So we'll take this 27,449.12 divided by 4, and then we'll take this number and multiply it by we get another date. Not right here. 6862 times 12. That's 82,000. That's 82,000. Um, this was TSLY. I don't know. I was trying to compound it monthly here. Basically, hold on a second. Did I? Hey, here. Let's just say we keep growing at the same rate at the end of 12 months. So month 5, month 6, month 7, and of course this spreadsheet. Man, this spreadsheet's really let me down tonight. 1.006. Say, let's see if we can just keep the same logic going here. Come on. All right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Like a mad scientist here. 12. Come on. 12. Okay, so 72,430, 72,433.8 shares times 1480. Shoot this thing. 72,433.8 times 14.88. Something's not right. Something's not right with this example. And this was for TSLY. Yeah, because we were getting cell C11 or cell C111 times B111. Wait a minute. You know what? I might have been doing it right before. I think I was doing it right before. I think I put too many zeros. Yeah, I'm about to get to OILK after I was trying to address this crazy comment I got about compounding the dividends monthly, and I've kind of gone off on like an infinite loop here. But eventually, I'm going to get to OILK. I have it pegged at about an 18% dividend. So thank you all for hanging with me here. I think I just caught my mistake. What I needed to do, I was actually right. I was actually right the first time. I added another zero, which that's what you want to do at the end. When you have a number, a dollar amount, you want to add the zeros at the end. That way, 100,000 becomes a million becomes 10 million, 10 million becomes 100 million. You want to add the zeros at the end of it, not like in the middle of it or in front of the number or the percentage. So anyway, let's see where we are here. Okay, so this should have been actually, I was right the first time. I added, I was thinking, I, I think this is right. This has to be right because this other example is too low. So I'm just gonna just to keep it simple. I'm just gonna keep it at like the 0.99. I'm gonna do this here. Stick with me. I'll have this in like a minute here. So let's see. This is month 1. We verified this one. Um, pull up here. Actually, I'll just keep it at 1.06. All right, make it simple. 1.06. Month 2. Month 3. Month 4. Month 5. 6. Let's see. Is that enough? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, so then you, in this example, you would actually double the number of shares you have. So let's see if the commenter, like the commenter's point was actually a really good one. He was saying that when you compound the dividends monthly instead of annually, it's actually a lot higher. So we're about to get a result here. Actually, wow. Yeah, he is right. And now I know I'm right because this number makes sense now. This times the current 1488, and this is just assuming that the price doesn't change. This is assuming to keep the example simple, which as we've seen, this was not the most simple example, but keeping the price constant at 1488 gives us $1,915,040 and some change. So by compounding it monthly, we actually almost double our money. So good job on that comment. It just, I kind of wasn't doing the example right at first. So instead of our 675,000 in this outlandish example of TSLY, by compounding it monthly, we would actually have 900 and what I just said, we would have almost 300,000 more compounding it monthly. That's amazing. So good job to the commenter that said that. I forget what your name was, but that was a really good comment. Let me see if I have my comments up here in this tab. Here we go. I actually have it up. I'm actually going to switch over and share some of these comments real quick because I have the screen up. So let's go to I'm going to go to my YouTube comment page because I get a lot of live comments here from those of you that watch me live. But after the video is uploaded and posted, I get a lot of comments too. So good job here to Billy SBN. He said, if you compound the dividend monthly, which is the way it's paid out, correct, you double your money much quicker than the annual compound shown in this video. So he's right. How about in a year? And so I did do what I said. I said when I responded to this, I said, good point, great point. I can do videos with monthly compounding too. Just don't want the example to seem too outlandish, but finally got the example out. So, all right, we're good. And then to Mr. Young Cool Chung, cool name, he noted my humor, which I've been making this joke for a while. So I'm glad it finally got noticed. Who wants to be Standard and Poor? And I make that joke about the S&P 500 because we as Americans, especially in our politics, we are actually very good at coming up with branding and names for stuff. Like when they name bills in Congress, they call something the Inflation Reduction Act, and when you actually read it, it usually does anything but. But we're really good at naming things. But one thing we're not good at naming is our stock exchanges, because the S&P 500 stands for Standard and Poor. And when you think about it, we all invest in the stock market to become rich and wealthy one day. So why in the world would anyone want to be Standard and Poor or even think along those lines of even just saying those words, Standard and Poor? The Standard and Poor is 500. So I said, like you make up your own index of stocks. The first time I made this joke, I called it the UNR, unconventional and rich, instead of Standard and Poor, because to me that's one of the worst names for a stock exchange. But other than that, I will say, we Americans here tend to be very good at branding things, especially like bills that come circulating in Congress. So that's all on that. I got another commenter here. I have a 60 414 put on TSLY at $16 strike. I fear this thing will keep falling ahead of the dividend and always be behind. Okay, so you got a put, so you're thinking it's going to drop. So put's the opposite of call. So let me think about this for a second here. So the $16 strike, it's at 1488 right now. So I think you're in the money on that put. So you probably, am I right? I don't do many puts. I mainly do calls. But if you're in the money on that, you're either going to get it signed or you're going to have to roll it. So let's see here. Tesla stumbled, so that's why I believe it's almost back to its 52-week low. Yeah, that's why this stock or this ETF kind of mimics Tesla, from what I understand. Oh, you sold the put. Okay. So then you collected a premium? Was it like a covered put or like a? Oh, yeah, nice. So how much of it did you sell then? You must have sold a lot. That's a really good premium. So then is it? I'm trying to think here. Is it in the money? Is it in the money then? Because the stock is or the ETF is at 1488. So is the put in the money? because the put it's like I mainly do the calls. 60. Whoa, 60 contracts. Look at you. Wow. That's the most I've ever done in something was the UPRO fund. I did 30 contracts, but good for you. Was the put in the money though? Yeah, okay. You answered my question. So what are you going to do then? You're going to have to roll it. If it's in money, you're going to have to either roll it or you're going to get assigned. That's, you know, I started doing some of this with calls and I actually backed off because it was just getting too risky. Okay. Anyway, oops, we're getting into options and we're losing live viewers. So that means I got to get back into dividends. Write it out when filled. You're going to write it out so you have the money in your account to cover that. Wow, you must look at you, Mr. Baller here. Good for you. That's all I can say. I don't think I could stomach that. Anyway, so we have another fund to cover. We're halfway through. So now that we're through all of the TSLY, the painful example there, we're going to go into OILK. Now this one I don't really know anything about. It was a fan suggestion, and that's how I learned about it because it showed up in the comments here. So let's go back to Yahoo Finance, and as far as that options comment, yeah, hopefully the compounding, hopefully that offsets whatever you might lose in that one. So anyway, OILK. OILK, come on, Yahoo. ProShares K1 free crude oil strategy ETF. Interesting. So it's like oil K. Dividend showing 17.1%. Fund was created in 2016. Expense ratio 0.71. And almost exactly fairly valued. Looks a little pricey though. Let's see how it's done. Okay, so going back to when it started, ooh, it's like fallen in half. Actually, oh, it was almost 140 October 2018, and then when the pandemic started, it dropped to 26.99. Hung in there a little bit, came back a little bit, dropped again, fluctuated around the $40 range basically. So historical data, dividends, and I don't think I'm going to go back in the spreadsheet on this one. I'm just going to calculate the example for the $1 million on this one from here. I think we probably had enough spreadsheeting for the evening. So let's see. Let me see how far back the dividend history goes. Well, you know what? I'll let you all say in the comment section, do you want spreadsheet analysis or just have me do it here? Yes, you're right. Good job there, Mr. Paul Varden. It was your suggestion. I had not heard of it until you mentioned it. And that's actually how I'm keeping this series going because I've kind of run out of the main funds that I know of. So I'm just taking audience suggestions at this point. So you're saying it's a little safer than the USO. Interesting. Okay. So let's see. Dividend history. Dividend history. It's been paying since 2017. Ooh, it had a $6 dividend at the end of 2017. Those were the days. The market was so smooth that year. Come on, don't do this to me, Yahoo. The page is freezing up. All right, so this dividend, it looks like it's inconsistent. So February of last year, March, April, May, June, July, August, September, and then they just stopped paying the last 3 months of the year. And then randomly they started paying again in March. So I'm not sure what happened there. And I'm not sure how Yahoo's coming up with 18%. But right now, what I'm seeing, this doesn't look too good. So Yahoo said, well, it said 17%, it was 18% the other day. So 18% of $44 would be $7.94. So it's taking, it's assuming like a 60 cent per month dividend. So on that, if you were to invest $1 million in this thing, which I would not recommend doing because it doesn't look like this is that consistent, that would be obviously 180,000. But you can see it missed like 3 months of dividends. So for you who recommended it here, Mr. Varden, you want to tell us why it missed 3 dividends? Let's see. floats with the price of crude. And yeah, the price of crude always fluctuates. Could be quarterly, and yeah, you might be right actually. Um, let's see. Some of them are higher because, like at the end of 2021, and this is strange. This is really strange because crude oil wasn't running up as much in those months, was it? Like September, November. I don't know. This dividend just seems all over the map. Like, okay, we had a really, really solid dividends in 2021, but we only got them in June, September, November, and December. So for that year, I mean, we got like, I'll add this up real quick here. We got a lot of dividends: 3.001, 5.608, 6.173, and then 7.165. Oops, darn, I screwed it up. Just say 3 plus 5.608 plus 6.173 plus 7.165. 2194. So $22 in dividends for that year alone. What was the fund trading at the time, though? Let's see that one. How long has this video been going? I've been going quite a while, I think. Oh, 36 minutes. Okay. So yeah, the dividends are kind of all over the map. Like I say, I'm not seeing too much of a pattern or logic to it. And how did I click that? I want to go to summary here. Let's see what it was trading at in 2021. And then after that, I'll open it up for more comments or questions, and then I'll probably end it because we're almost 40 minutes in. So let's see. 2021, we were trading at $60. So this was like probably a 30% dividend in 2021. That's really good. But like I said, this one looks a little unpredictable. So this wouldn't be at the top of the list. So I'd probably have to say that TSLY hands down wins this competition. So where did my script? Oh, here it is. I got too many tabs open. Okay, so with that, any other comments, questions, concerns? If not, that was a good video. Glad you all stayed with me through that crazy example. But at least we found out we got an extra $300,000 on the TSLY from compounding monthly instead of yearly. Retire for less. Let's see, like what? Give me a number. Throw a number out at me. Because I'll just keep this series going, but I may just make it 100,000 or 10,000 instead of a million. So let's see here. Make the ultimate portfolio. Yeah, I could do that, just the ultimate ETF portfolio. Well, what I say, like what I do in my 401k, I have because most companies, they restrict you to whatever they have in their 401k, which I don't know. I thought about rolling my last one over and then even doing options on it, but I don't want to gamble the whole thing away because it grew to a lot. So, but what I typically do, I do like a domestic large cap fund. I do an S&P fund. I do the company stock fund. I do, what other ones do I do? I was doing a small cap fund, but I got out of that. So I actually stick to those three: S&P, large cap, which had a lot of the tech companies that ran up in the last 5 years. Yeah, that's a good idea. I'll probably do that. Now that I have that idea in my head, thanks to that commenter, I might actually go back and do all of these again with the monthly compounding. So, okay, 400,000. So you think that's the ideal portfolio? I thought you were going to say lower than that for some reason, because you said like 10,000 before. So I can do something like that, but I just gave you basically like what I do 401k wise. Now, my new job, I couldn't do a large cap because they didn't have it. So I picked the closest thing I could find. Oh, you just went down like you went down. You're like 10% of where you were before. That was a fast drop. If I was negotiating with you, like buying something, wow, like buying a car, like wow, we went from 400,000 to 40,000. That was fast. Can we go to 4,000 next? I'm just kidding. A year to retire on. Now, if you had 400,000, I think you could live on that. Like if you had that in a 401k, if you absolutely had to, they penalize you 10% for the traditional IRA, which the 401k is, because that money's gone in tax deferred. So you get another 10%. So they bust you like 30%. But say your expenses are like, say you can live on like 20 to 25,000 a year. Say like you own everything and you can live on that. Then just withdraw from your 401k. And you know that whole rule, like as the account keeps growing, you withdraw a certain percentage and the growth exceeds that. So it's almost like you're withdrawing it for free if you had to. But I think, like if we manage our expectations as far as what we actually need and stuff, I think we could actually retire on a lot less. So let's see, 400,000 principal, try to retire on 40,000 or more a year, something like that. So you'd only need to generate like a 10% rate of return on that in order to retire on that. And as you know, most of the dividends we've covered are paying way more than that. Like your example there, the OILK, even though I don't fully believe it, it said 18%. So 18%, well, that's true. That's if you're old though. Like, I mean, I'm not going to get Social Security probably for another like 40 years if I wait till like the full, whatever. Just I don't even know. It's not something I'm thinking about because like I want to retire now, like as soon as possible. So Social Security is not going to be a factor in that. But you're right. If you're old enough to get it, um, and no offense, I didn't mean old, like old people, but you have to be older to get it, is what I mean. So what was I going to say here? Oh, 400,000. Just to take your 18% SVOL example, that's 72,000 a year. Um, so you could easily uh, invest that and I think grow it because in the years 2019, 2020, and 2021, 3 years in a row, I did like 30% in the 401k because of those funds that I was in, the S&P, the large cap, and my company stock. So if you're doing that, you're growing that account fast. And if you're getting that kind of growth on like 400,000, you're going to be turning that into $1 million pretty soon. If you can get 3 years in a row like that of like a 33% return, you're going from 400 to 532, 707,000, and then almost a million in year three. So when you're doing that, and then you only withdraw less than what it's growing, it's like you're playing with the house's money. So in that case, yeah, early retirement is very feasible. Now, for me, Social Security can get a little controversial, and there's a lot of different opinions on Social Security. Like it was originally designed for it's not it's being what it's being used for now. There's so many people that have no retirement set up at all. And so Social Security becomes like what they live on. And that's never what it was designed for. It was designed in the Great Depression so that people didn't starve, so that people could go buy food and stuff like that. It wasn't supposed to be a supplement for retirement. So, like, for people that are better with money and better with investing, if you could actually take the lump sum that you've put into Social Security and invest it privately, you would do way better than whatever the government's going to pay you. But if that happened, and that's been proposed before, the whole program would collapse. So, I mean, I'm not necessarily for that because I know there's a lot of people that need it, and it's basically become ingrained in our society at this point. But that's the alternative, opting out of it and then investing it privately. Anyway, and then you said tax efficient retirement. That's a bit market on YouTube, conservative, high risk portfolios. You could do well with that. Yeah, as long as they watch, because boring videos don't get as much audience, but dividend videos do. So I don't understand what you're saying. Conservative, high risk portfolios. Isn't that like an oxymoron? Isn't that like a contradictory statement? Because if you're high risk, you're risky. You're not conservative. Conservative's like a low rate of return. But that's what I try to do. I try to be out of the box, and I try to be. I'm very risky. I call it the THB method. I'm very risky, but it pays off because what I've found in my experience with investing with the market is that the riskier you are, the market's gonna be in this spectrum. The more conservative you are, you're gonna limit the downside, but you're gonna limit the upside too. So you're gonna be here. The more aggressive you are, your potential is gonna widen, meaning you could be further down here, or you could be way further up. So the way I look at it, and people a lot of times operate from a standpoint of fear, which I just can't be a part of that because when you operate from a standpoint of fear, and I mean I've been there before. It's we all have to kind of grow out of that. But when you operate from a standpoint of fear, it's going to limit you so much. Our markets here in the U.S., if you look over 20 years, I would pretty much It's almost like 100% certainty that they're going to be higher in 20 years than they are today. But there's people that will sit there and tell you that, oh no, it could, the dollar could collapse. This could happen. The government could collapse. This could happen. No, the market, I don't see the market going anywhere. Yeah, an asteroid could hit the earth, you know, and if that happened, then all of this is irrelevant anyway. But when you exist in that state of mind, when you operate from that state, you're just never going to accomplish anything in life. You're going to just live in this box your whole life. And I can't be part of that. And that's not what this channel is about. I see you might as well widen that spectrum because okay, forget this side over, or I mean this side over here. It's like looking into a mirror. It's backwards. Forget this side over here. You're probably going to be up. So you might as well widen your probability of being up because 10, 20 years, look at the S&P over the last 12 years. Look at how it's done. If you had just invested in the S&P, you would have been way, way ahead of the game. Instead of these people that do all these conservative investments and stuff like that, just put all your money into the S&P. I guarantee you it would have outpaced all your annuities, all your CDs, all your money markets, all that crap that you think makes you secure because you exist in fear. The S&P was averaging like 18 to 19% a year. And then you reinvest dividends and it's even further. So I don't know how I got on that rant, but that's the basic idea there. You might as well be more aggressive because if the market's up, you're up. If the market's down, you're down. Less. It's just less down if you're conservative, or it's more down if you're aggressive. But you can't exist in the state that oh, the market it could drop. Yes, it could, but you look at it over the long term and it's up. It's doing this long term. Look at 50 years. Zoom out. Ignore the day-to-day fluctuation. Now this is funny. SVOL, you could. I mean, if you have enough money, you can day trade whatever you want. I would like to just day trade and just be done. I want to be like one of these people that says, "Hey, I just day traded for the first hour that the market's open. I'm done for the day. I made my $1,000. I'm gonna go to the golf course and I'm gonna drive my Lambo around and just do whatever I want, smoke my cigars, do whatever I want for the rest of the day." That's the idea. If you have enough money, you can day trade anything. Um, Let me see here. You could make swing trading it. Yeah, come up with an example. If you have a paper trading account, do that in paper trading, and then come back tomorrow and show us your example on how that went. But that one, I just hold that one mainly for the dividend. If I was going to day trade, I would day trade options. And what I would do, I would buy them, especially like on a Friday. If I knew some big news was coming out Monday, I would buy, like, say, put options. If I thought the market was going to tank Monday, have them Friday, and then sell them out within the first 30 minutes that the market's open. Or same thing like with call options. If the market's going to be up, then and some of them you can get and you just let them run. Like if you had a great earnings report, just let that thing run. You can make thousands of dollars. My favorite example, there was a stock called Danaher. I've done a video on it. 2021. If you had bought like 10 option contracts between July and sold them in like September, you would have made like $72,000 just on that one trade. That's like an annual salary. You would have put in 10,000, but it would have made you the 10,000 would have 7x and turned into 70,000. That's what's possible if you catch these things at the right time. But anyway, with all that being said, we've been going quite a while here. Still need those watch hours, so definitely watch this as many times as you need to. And please remember to like, comment, and subscribe. Thanks so much for tuning in. If I get another comment or two that pops in here before I end the stream, what? What's this? What? All right, you got me for another minute. What's clarify? My watch hours or what? Or the example I just gave? It's one or the other. Flip a coin. So I'll give you like 10 seconds to follow up on that. But I just told you. Well, you can always play the video back after it's done. But what I'll do? Oh, look this up. Actually, you know what? I'll pull it up here. Danaher, because a lot of people don't believe this. A lot of people think this is crazy. These are the same people that think that the market could drop every day or all the time. Um, DHR. And I probably it's not just that one time. This has happened several times, and I did a video on it. I'll actually, when I link to the video, like when I post the two, the one that you see up here and the one that you see up here in the middle of it, not in the middle of it at the end, I'll link to the video I did because I did a Danaher trade back in November. Probably made like $7,000 on it, but if I had 10 contracts, it would have made the 70,000. But this happens in this stock. I've studied the stock extensively. This stock has the same thing happen several times. But what I'm looking at here in particular, if you can see my phone screen here, is from here to here. So from 2020, from the bottom of the pandemic to August 30th, 2021, this stock went up 168%. So if the stock is up 168% and you know the leverage that options bring to the table, think about how well you would have done with option contracts. So in this one, in this particular example, from I think it was May 2021 to August 30th, 2021. Okay. And I think I can zoom out 2 years because this was only like 2 years ago. So here you go, right here from, uh, and you would have done even better if you had perfect timing, which most of us don't have perfect timing. But if you bought this like June 3rd and held it till September 15th, let me try to keep my finger on the trigger here so that you can see, but it's not going to, basically right here, not here, but not here, but over here. See from here, I'm trying to, it's like looking in a mirror. I can do it here. All right. 36%. You see that from June 7th? I'm sorry, not December. I want this peak here. 35% from June 7th to September 17th. Okay. This stock, you see that peak there? Like right over here? That's where your option trade, it's like a lightning trade from there to there. It's like lightning hit the stock. See that? That's where your trade would have happened. But you can see with the stock, look at this. This happened one, two, this happened like four times on a smaller level. So on that example, if you had gotten 10 contracts of that um, in that short time frame, you would have made $70,000 just like that. That's what's possible with options trading. So, and that video I did it like in November, and I'll show you. I have the contract, the trade, and you can go into TD Ameritrade and you can actually back test these. There's another one I did with the Amazon call option because Amazon stock, when the pandemic, when everything dropped, I'm telling you, if you were sitting on cash like March 2020, when the market tanked and the government put all that stimulus money into the market, that was like the best time to invest. You could have made millions in the market. Like if I could time travel back to March 2020 and just have everything in cash, I'm not kidding. I'd make $5 to $10 million in that market. If we ever get that opportunity tomorrow, it's funny because I just read your comment and I said the word tomorrow, but like if I would do that if this was like March 2020. That's exactly what I would do. I don't know about Danaher tomorrow. I don't know what it's going to do tomorrow, but I will say this does happen. When I notice it, you want to follow that time frame I showed from summer to fall, basically. What's that, the third quarter of the year? When they release the earnings in that quarter, that's when these tend to happen, third and fourth quarter. But I got to go back and I actually have to study the fundamentals on it and pick another good one. It was called DHR. And again, I forgot what they do. I've read their bio a bunch, but I couldn't even tell you what they do. Um, let's see. Let's see how they're doing right now. They may be setting up for another one here. Let's see. Where were they? The trade I made in November, it went from like 241 to like 270. So let's see, March 10th, and maybe time for another Danaher trade. Not saying it isn't. March 10th, 240. It's hanging at about like 240, 250. So let's read your comment here. Do you trade options too? 21. What's this 21? 21, I made 30%, then got out of my NASDAQ index fund. Is that just index fund or did you trade an option there? I'm not sure what 21 means. But anyway, yeah, just keep an eye on Danaher because that's probably my favorite example. Anyway, well, we've been going quite a while here. You all kept me on another 5 minutes, so you got bonus time. But with that, good session. We got into options trading and things like that. So thank you all for watching. Please remember to like, comment, and subscribe. Thanks again, and take care.